Hey everybody, this is RC Peck, and this is my weekly video where I bring out what I think is the most important piece of data news in the week that really no one's capturing or people are not talking about enough, that it has a heavier impact on people's portfolios, people's retirements, but it's really not getting that attention. And that's what we're going to do today. So what I want to do is let me jump over to, let's do this. Let's jump over to the first price chart here. Now, last week, I talked about Blackstone and their private non-tradable REITs. What I want to just show you here, because it's nice to show you something with a visual, well, to show you in a picture. The blue line on the screen is the Vanguard Real Estate ETF. It's down about 24% year to date. The red line, it is a tradable REIT. It is publicly traded, but it's similar in the sense that they get to appraise their own price, right? They don't really have the market giving price discovery on all of their assets, right? So the red line is also a REIT. It's publicly traded, but as you can see, it's up almost 12% year to date, while this ETF VNQ is down 24%. The red line you can get in any day you want. You can always buy it any day of the trading year. But if you want to get out, you have to wait to the end of the quarter, and they do have redemption limits, and they can gate how many people get out. Now, I don't know if they started gating money. That's not the point. The point is that that red line is a $7 billion REIT that's in this quasi world of price discovery, non-price discovery. Now, I bring this up because B REIT, that's the Blackstone REIT that is basically gating redemption. Also, I'm going from memory, says they were up 9, 10, 11% year to date. I want to put that when showing you that this price discovered REIT VNQ is down 24%. Now, this is not the price. I think this is interesting to show you this, but I think what's really interesting is this chart right here. This chart shows Blackstone's B REIT. That's the red line at the very top going to the right. It shows it has about a 9 or 10% gain for the year. All those blue lines going to the left are all these others. Let's call them 40 other REITs and their performance year to date through October. So what's the chance of B REIT being up 9 or 10% for the year while all those other REITs, professionally managed with really smart PhDs and CFAs and whatnot, are all negative? It puts a black eye on Blackstone. And there's something going on in this non-tradable market, or this non-tradable part of the market, that I don't think is getting enough attention. I know I talked about B REIT last week. I know I talked about non-tradable assets last week, but something's going on here. And part of the market, I think, is starting to figure this out. Now, this is a price chart of Blackstone right here. I'm super zoomed out right here. Let me go just to like the last 3 years. And I know I talked about Blackstone last week, but it's down 46% year to date. To put that into reference, the financial sector, XLF, is only down, let's see, about 15%. So Blackstone, which is part of the financial sector of the market, is down 46%, 3 times worse than the financial sector, which is down 15%. Something's going on, and not all the news has been released. Now, by the way, I think what's happening with Blackstone and these non-tradable REITs, and how I'd be embarrassed. Like, there's no way that Blackstone is up 9 or 10% for the year, and every other REIT on here is down. Something's off. But I also think that it's really also about what's going on with FTX and Sam Bankman-Fried. When money is free and interest rates are zero and the Fed is printing trillions of dollars and the government is sending trillions of dollars collectively of checks to people, no one really checks. No one really needs their money back, but people are starting to ask for their money back. It does not matter how much you like the person. If you can't get your money back, there is a problem. And I think FTX and Blackstone and other non-tradable parts of the investment world are in trouble because no one's really paid attention to them. But now people are saying, hey, you know what? I actually think I want my money back. And I think more and more people are going to be surprised that they're not getting it back. Now, with that, there's another company we've talked about before. It's called Credit Suisse. It looks like Credit Suisse is going to zero. Now, I don't know when it's going to zero, but if you look at the price chart here, Today, a share of Credit Suisse is $3. Okay, let's just put this in perspective here. Credit Suisse was $52 way back in 2007. This is not a good sign for the stability of the market. Again, the Fed is increasing the rates to 5%. That's not new news if you follow any of my videos. The European Central Bank, ECB, is now basically following the footsteps of what the Fed is doing. They're going to start cranking up their rates faster. They're going to start quantitative easing too. That's the two largest economic blocks on the planet doing that. Okay, I have one more thing I want to show you, and then we can wrap this up. So let me just show you what you're looking at here. This is data of the annual return of U.S. Treasuries in the U.S. from 1928 to 2022. So just for easy math, let's just call it 90 years for easy math here. Okay. There are periods where bonds have been down 2 years in a row. Happened in 55 and 56, happened in 58 and 59, and it happened in 21 and 22, as in 2021 and 2022, the last 2 years. A couple things really stand out to me that I wanted to point out to you. The other times where there were 2 years in a row where the U.S. bond market was negative, it was by low single digits. 55 and 56 collectively down about 4% if you just add those up. 58 and 59, less than 5%. And then you look at 21 and 22, and collectively those two together are down about 18%. So the bond market's been hit really hard over the last 2 years. And as you've heard me say before, I believe it's the largest bond market crash ever, and it has bottomed. The first part is not new news, but I believe it has bottomed. The thing I want to point out to you here, and that I think is point-outable and important, is there hasn't been a period since 1928 where the U.S. bond market's been down 3 years in a row. And this year's bond market being down, let's just call it 18%, is 5x worse, 3 to 5x worse than the other two times the bond market was down 2 years in a row. I think the bond market is the place to be in 2023. I think it's the buy of 2023. I don't see commodities doing well. I don't see real estate doing well. I think the market is telling us something. So let's wrap this up and let's kind of really talk about, we have about 2 more of these videos. I haven't checked the calendar before the end of the year, but let's just kind of wrap up what's going on. FTX, crypto, private equity funds, private venture funds via companies like Blackstone, Starwood, BREIT, these non-tradable, illiquid funds that are starting to gate their clients from their money is a sign of what's going on. I'm not saying FTX is Blackstone or Blackstone is FTX. I'm saying the same thing's happening to all these different parts of the market, which is really one part of the market, which is called trust me, even though you can't see what we're doing. That part of the market has frozen up and it's starting to affect people. And then the other thing is bonds are really standing out to potentially be the place to invest in 2023. I think commodities have peaked. Stocks have peaked. I believe stocks are going to continue to go down. Real estate has peaked. It's going to continue to go down. People don't really invest in currency, so set that asset class aside. And we're really left with the bond market as the investment of 23. And in some ways, it's actually been the investment of the last 2 months also. Thanks everyone for being in my world and watching this video and these videos. It makes a difference when you like, subscribe, and leave a comment. The algorithms love it. Tell me where you think I got it wrong. Tell me what you think I'm missing. Tell me something you follow that people are talking about that I may not have seen, and I can dig into it. But again, these videos are about what I think is standing out the most to me this week. And it's typically a part of the market or a piece of information or data that no one or very few people are talking about. So we get about 2 more of these videos before the end of the year. Thank you again, and I look forward to seeing you on the next one. Okay, bye.